This is the official dossier on Topic 1D of your syllabus, Principles, Concepts, and Conventions. Welcome to the studio, audit trainee. I am Elder Mrs. Ifeoma Okoro. The board's precise objective for us today is absolute. You must demonstrate the ability to apply the correct principles and conventions to solve specific, high-stakes accounting problems. Accounting is a moral obligation. Every ledger entry you make must perfectly reflect the structural truth of the business. You need eyes like an eagle to see past the raw numbers and into the reality of the transaction itself. Memorizing formulas will fail you when the examiner twists the scenario. Mastering the verbatim rules laid down in the syllabus is your only path to passing the audit and securing a score of 90 or higher. Take a look at this challenge from the 2015 UTME, Question 2. It asks what we call the act of assigning revenues to the accounting period in which goods were sold and expenses incurred. The options are heavily guarded for now. Before we evaluate the choices, let us run a Socratic voucher check. Imagine you are a yam vendor. You acquire your stock on credit in December, but you sell the yams for physical cash in January. Audit trainee, look at the timeline. Where do you think that cost and revenue truly belong? The common instinct is to assume the profit is recorded in January, simply because January is when you physically count the paper Naira notes in your hand. In the professional world, the physical movement of paper money is actually secondary to the ledger. Your records must track the exact moment economic value is exchanged, regardless of when the cash arrives. Relying on the cash basis illusion, thinking like an everyday consumer rather than a strict auditor, is exactly the weakness the board targets to make careless students fail. This calendar illustrates our market bridge. Think of your mother preparing her famous pepper soup. She buys the expensive goat meat in December, but she sells the finished hot soup to her customers in January. You cannot ignore the December meat cost when calculating the January soup profit. That cost must be brought forward and matched against the January sale, inside the exact same soup pot, the accounting period. If you record the sales revenue without subtracting the effort it took to create it, you are signing off on a lie. The business would appear artificially wealthy when it is not. Now we reveal the examiner's hidden liabilities. Because we know costs and revenues must sit in the same period, option A, the matching concept, is the undisputed correct answer. Notice the distractors crossed out in red. The board tries to trick you with official-sounding jargon like adjusting for revenue in option C or passing of entries in option D. These are leaks designed to drain points from those who lack structural knowledge. Accounting logic requires the effort, the expense incurred, to perfectly align with the reward, the revenue generated. We do not fall for terminology tricks. This is the Sharp MCPM mental map. Keep this framework firmly in your mind to navigate any conceptual exam question. M stands for matching. This is the rule of linking expenses to the exact revenues they helped generate inside the exact same time period. C is for consistency. A business must use the same accounting methods year after year. You cannot change your depreciation method arbitrarily just to make your books look favorable. P stands for prudence. You delay recognizing any profit until it is actually realized, but you record expected losses immediately. The final M is materiality. We ignore negligible details, like the depreciation of a 50 Naira pencil. We focus entirely on data significant enough to change business decisions. Solid work, audit trainee. The foundation is set and the voucher is clean. To ensure your ledger is completely audit-ready, go to the studio and launch the 1C video, slide, and mastery quiz. Your mastery of Topic 1D is confirmed. Return to the dashboard and take the mastery quiz to move your progress bar to 100%. We are building a true professional here.